Welcome to MarketTamer.com. As always, nothing in this video shall constitute a recommendation to buy or sell a security, and please do contact your financial advisor if you have any questions regarding a position. We're looking at a chart of Exxon today, and the reason we're doing that is a question came in regarding a feature on our Watch the Pros page, which was a bull put spread trade on Exxon, which was posted last week on July 17th, in fact. And the question was regarding the fact that earnings is approaching for Exxon, and why was a bull put spread trade considered prior to an earnings announcement, which is a really good question. And usually it's not something we favor. In fact, usually if there's an earnings announcement, we cite the fact that there's volatility and the risk of unknown movement directionally and magnitude of movement as reasons why it's not a good idea to try and predict what direction a stock will go, and therefore not usually the most prudent decision to actually make a bet on direction. That being said, why consider a bull put spread prior to this earnings? Well, there are a number of reasons why I was comfortable with it, and so I'll outline them. And none of these reasons diminish the fact that there is risk going into earnings. So don't consider any of this to be offsetting or mitigating that risk. That still exists. Nevertheless, I was looking here at chart patterns. The first thing we note is back in March, when there was tremendous panic in the market, very negative sentiment. We had a very big drop in Exxon, but it bounced up. It bounced up from this low 60 level, and notably it didn't last below the $65 area for more than a few days. If we continue into April, we see it also dip down, but again it didn't last below that level for more than a few days. Fast forward up to July, and I was keeping an eye on the fact that we had these patterns in the past, had not stayed below 65 for long. And so when it dropped down into the mid-60s again here, I was looking for an opportunity to take advantage of a bounce back, but I didn't know that a bounce back would occur. So I tend to prefer that the market actually dictates to me what I do. And in fact, that's what it did right around July 17th here. We had the move up. And with that, I felt much more confident that the same action would materialize. So back in March, back in April, we continued higher. I believe that would be the case also in July. But moreover, if we look beyond the technical pattern, there's also fundamental reasons. For example, Exxon is a very large company, and the stock price is, it oscillates certainly, but it doesn't oscillate in the same way something like a Baidu.com, which is a much smaller company, might oscillate. In fact, if you were to look at the fundamentals of Exxon, you'd see a market capitalization of about $339 billion as I speak. You'd see revenues somewhere in the order of $400 billion, and you'll see cash levels around $25 billion, debt levels around $9 billion. So it's a very solid company. Obviously has an international base, and that being the case, it's not a company that you're likely to see take a move in the same way as a bank might move. For example, a bank always has a risk of going to zero because of its excessive debt loads. If you look at a company like Exxon, which is producing something that isn't in need every single day of the week, and has an international base, an established an established presence worldwide, the chances of it dropping to levels that a bank might drop to based on this crisis is quite low. In fact, there's always a need for energy. And as a result, I was feeling comfortable fundamentally and technically with this position. And so essentially I was looking at this $65 area, which is where technically I believe there was support, and even if there was a dip below, I didn't believe that dip would last more than a few days. And as we've seen, there has been a continuation higher. It's not to say that that will remain the case. We might see a reversal. If that's the case, we might have to take action. But the fundamental thesis here is that it's okay at times to violate rules if you have a good justification based on fundamental and technical reasons, but it's certainly not the thing to do all the time unless you have very strong reasons for doing so. With that, if you have any questions, we look forward to seeing it at MarketTamer.com.